We got some questions kind of we got some questions when we posted that we're going to have you on the show, and I want to kind of rephrase one of them, which is
Okay.
around your shareholder base and let's say the stock multiple. Would you rather have your stock trade at a 25% free cash flow yield or a, I don't know, call it 4% free cash flow yield? Like, because, you've talked about wanting to, if it's at 25%, you can create a
This
lot of
this
value.
this is this is a great question, and I'll give you my answer. Have you ever watched the movie Big Daddy? And you remember the little boy was playing cards with the delivery boy, and he passed out five cards, and he'd take his five cards, and he turned them over and say, "I win." And the little boy, "What are we playing?" He goes, "We're playing I win." In that scenario, I win either way, right? And our long-term shareholders win either way. If it's a 25% yield, we're going to buy back stock, right? So anybody that's holding long-term is going to get that gain, right? The free cash flow per share yield is going to start growing 25% because we're just using the free cash flow and investing at a 25% free cash flow yield because we know what our existing assets are. If it's a 4% yield, now we're going to buy stuff at 5 times where we're trading at 25 times. So we're going to be able to go in there and really make unbelievable deals, which will be great for our long-term shareholders. So I always say, I win. That's what we're playing, right? And or we win is really what it is because it's long-term shareholder win. And I just look at myself as another shareholder. And so both of us, the only time it hurts us to be a publicly traded company is when we're 100% fairly valued or not off enough that we can take advantage of it one way or the other, right? But if we can take advantage of both of those yields, I mean, both those yields are great opportunities for us to take advantage of. The problem we had from 1999 through 2015 is A, we didn't measure it, and B, we rarely took advantage of either side of it. Because if you don't measure it, you don't know what it is, and you don't know when you're taking advantage. And sometimes we issued equity at the absolute worst times, right? Our free cash flow yield was 25%. We're buying something at 5 times, and we're issuing equity on it. So we're trading at 4 times, and we're buying stuff at 5. That's not a very good, and we're using paper. It's not very good for our long-term shareholders. And we were punished for it, and we didn't understand why. Because, look, well, be honest, I when I started in the business, I was a strip club operator. I had to learn to become a public company operator. I had to learn to be a CEO. It was never my goal to be the CEO. I was an operations guy. I lived in the clubs 17 hours a day, 6 days a week, and 9 hours on Sunday. And if I took off 2 days in a month, people thought I was sick. Something was wrong with him. What's wrong? He doesn't go on vacation. And so switching to a corporate role was a big change for me as happened, and it took time. And I thought I hired smart financial advisors and smart people because I was told by everybody these are the smart guys you need to hire, and they were kind of. I mean, they're definitely smart guys, but their interests weren't aligned with mine, and they weren't aligned with my shareholders. And I want my interests and my shareholders' interests completely aligned. That's why I own so much of the stock. I haven't sold any of it. I've had plenty of opportunities. I mean, I should have sold some in 2008. I had financial advisors that told me, you should sell when the stock went to in the 90s this past January. I was being told you could sell 90,000 shares. You need to sell 90,000 shares at $90. Take 8 million off the table. And I said, look, I'm a long-term shareholder. I don't care about this temporary. I'm going to sell it. I'm going to pay a bunch of tax on it. Now I got to earn 20% back before I can even get even. I said, I'll sell in 15 years or something, or I'll never sell. Just go into a family trust. We'll increase the dividend to the point where I'm making enough in dividends that'll run to the family trust and flow out that way. Or we'll just keep buying back stock, and who knows, someday I may be the only shareholder left because the stock just we never get the market valuation we should get. But I don't think that. I mean, we've had some great market valuations many times in the past. It's just we get momentum guys in there. They run the valuation up. And then as soon as that momentum stops, they dump. And there's not enough, what I consider long-term shareholders that can buy enough of it to hold the value. And so it goes back down. till the deep value guys jump back in, right? Which is what I think we're seeing right now. And I kind of thought the deep value guys would jump in at 48, but I think everybody knows the last time it went down to $48, I bought $3 million worth of stock in a week. And the next week I was buying 3 million more. I was trying to buy 5 million, but the volume was so low we could only get 3. And the next week it went to $55 again. And so I think people, the market kind of started coming back a little bit 2 days ago, and I think people just jumped in early, and we may get another shot at it. Who knows? We're sitting on about 26 million in cash right now. Stock goes under 50, we'll probably buy 100,000 shares. Try to buy 100,000 shares in that first week. It's under because we just issued it at 80, so we might as well buy it back at 50. And if it stays down there, we might try to buy another 5 million over the next week or two. We're free cash flowing over $1 million a week right now. So even if we bought 5 million, it's only 4 million of our reserves. We drop down to 22. We could buy another 4 million the next week, drop it down to 18. 18 is kind of my minimum comfort zone. We could probably operate at 14 to 15 million cash on hand. But I'd like to stay around 18 million cash on hand. So we'd have to start thinking about it. If the stock dropped to 40, we've got a lot of real estate equity. We're actually in the process of cashing out a bunch of that right now to pull in about 25 to 30 million in cash. We started that process, I guess about 10 days ago when the stock looked like it was just falling every single day, $1, $2. And, we were getting long-term shareholders calling saying this stock's going to 40, it's going to 35, it's going, our models say you can see 32. And I was like, we need 30 million in cash now, because if it drops under $40, let's buy back 750,000 shares of stock. Let's buy 9% or 8% of the company. If it drops to 30, maybe we get 11%. Who knows?